it's a really interesting lever that gives a lot of flexibility to Oxy, because right now they can use that money in lieu of the $19 billion of debt they need to raise, or there's the option that that could add to the cash component of the offer and lower the shares issued. And if they can lower shares issued below roughly 150 million, they won't need to seek a shareholder vote.
I'm interested that that part is part of this as well, because why are they doing this if their shareholders are potentially going to be against it?
Well, it's possible that they're doing this because the Anadarko board may want that security, because shareholder vote risk is out there right now. And I think if nothing else, the stamp of approval from Warren Buffett plus $10 billion gives you a lot of flexibility.
Does it make it less risky for shareholders of Occidental who were worried about the stretch on the balance sheet from doing a deal this big?
It wouldn't ease concerns if I was an Oxy shareholder, and I say this because that $10 billion has an 8% annual dividend. So they call it preferred equity, but it's really dividend by another name, although it's slightly a different part of the capital structure.
I mean, to that point, it's a type of deal that Warren Buffett's done before. You go back to the financial crisis, lots of the banks. One feels like those were for companies in total distress. Occidental's not so much in distress, it's trying to make a sort of forward-looking transaction, and it comes at a very high price, does it not? Is this a sensible move? What do you think about the CEO's decision to go forward with this?
I think Vicki Hollub has essentially pushed all her chips forward. This is her bet, and I think her legacy as CEO of Occidental may ride on the outcome of this. So in poker terms, they're pot committed, and they're going all in right now, and they're trying to win this deal. And I think when you think about getting to shareholder approval, what this could do, the Buffett funding, the Berkshire funding on top of, how you think about the passive investors, the ETFs that own Oxy shares, and how they could possibly influence those votes. That's going to be an important part of this because of the passive investing community.
So what does Chevron do next?
I don't know. They're really in a bind now because the common thinking was at a similar bid, Chevron would provide more security because Oxy needed to do the shareholder vote. But now that's really not the case, and you have buyer's remorse. If you outbid, Chevron can walk away with $1 billion.